Today's topic is the true meaning of inducement. Now, majority of the time, many of us are always a form of inducement in the sense that people call it a fake breakout. As retail traders, the retail traders do have their own fake breakout. They'll tell you if you draw trend line to trend line and it doesn't come out with a body and weak, you don't take the trade and stuff like that. That's how it is for ICT and SMC trader. Now, I want to explain inducement to you. Now, market moves in higher high, higher low, higher high, higher low, higher high, versus the same way it goes for a bearish momentum. This is for a bullish momentum. Now, for a bullish momentum scenario, I have my higher high, higher low, higher high. Now, majority of the time, market comes like this, come like this, come like this, come like this, and comes down, and we think it has done a change of character. I'll be marking here as mitigation block, but instead it has induced you in, come down to either the other block, fair value gap, and move up to the continuation of the trend. Majority of the time, we call this accumulation, manipulation, and distribution, in the sense that this is also signaled as majority of the time also market always creates equal low or equal high here. Then we see market come and take in other block here, or let me draw, I'm trying to make my drawing as simple as possible, or we see market coming to come and fill a fair value gap here. But now this is not the only thing you take as a confirmation. You have to wait for the right confirmation of your trade before you can enter the trade. But this is what we call an inducement. Majority of the time, you have to use your Fibonacci from the high to the low. Majority of the time, it's always above. Let's assume this is a buy scenario. It's always happening in the premium zone, and we buy at the discount. We are buying low. Example, they sell orange for, let's assume they sell orange. Different people are selling orange, and you see a customer, a marketer selling orange for 10 naira, and you see another marketer selling orange for 50 naira. You want to buy 10 naira. You want to buy $10, 10 naira orange, right? And you want to sell it high. So you're letting my orange, buying it low, and you want to sell high, but you cannot be buying high in a bullish scenario. It's not possible. So use our Fibonacci. Market has created a fake movement for you. You would have want to enter around here and you'll be induced. Example, I'm using a 4-hour time frame. Now, if you look at this scenario now, there was a break of structure here. There was a break of structure here. Can you see it? There was a break of structure here. If you draw your Fibonacci from the high to the low, right, you can see that market bought what? Market bought, this is for a bearish moment. A bearish has a sell momentum. Market bought low. Market is selling low instead of selling high. That's for a bearish momentum. And if you look inside here, what is in our premium? Another block. You can see market left all the stories here, created equal. If you use a trend line and draw it, you realize that they are all touching each other. Sorry, you can see, or if you don't want to use a trend line, you can even see an equal high here. You can see that a market induced you in. Do you see it? The same thing here. If you can take your Fibonacci from the high to the low, you can see the scenario here, right? Market this was in a premium zone. You can see in a premium zone, and we have an other block in the discount. But what has happened inside? It had created a double top. Oh, that's for retail trading. An equal high. Now let me find that example for you here. You can even go as low as 15 minutes. You can go as low as 1 hour. If I go to a 1 hour time frame, I would still find the same thing. Let me show you here. Now, if I draw my premium, from my premium, do you see to my discount? You can see, right? From my premium to my discount, let me draw it well for you to see very well. You can see that this had a retracement here, but it did not touch any institutional order flow. But what did we have here? We have an order block. Even though it was not in the same direction, it changed, market shifted structure here, but you can see market reacted there as a form of inducement. I want to find you a good example. There's also an inducement. You can see, right? An inducement here. Trying to find the good examples so you can understand what I mean. Okay, now if you can see here, market shifted structure here. Okay, no, it didn't shift very well. I don't like the structure market shifted, but if you can see here, market shifted structure. Let's try it. If you draw in here from our high to our low, market induce this candle, and you can see. And let me tell you a beautiful secret: anytime you see market induce a zone, hey god, like if market there induce a zone, just prepare all your money, like prepare all your money in your bank account, because that trade is going to go beautiful. If you use that correctly, that word, market is going to go sweet from the high to the low. You can see it, right? From the high to the low, we're selling is in the premium zone. This is a discount. You can see it created double top, or you can call it equal high, double top. And if you look inside, it has taken liquidity, and we have other block here, You can mark the fair value gap here. Market did not really touch it though. You can mark it here, and you can see, but it's 50%. We had what? We had a liquidity void here, but this is a good trade, and this is like a confluence for you, and you're good to go. Let me find you other examples. I need to give you examples so you can see how it works. A break of structure. Just go around your chart and play with it. You can go to your 5 minutes chart. You can go to 1 minute chart. Just play with it and see how it works. You can see there was a shift in market structure here. Shift here. If I use my Fibonacci from the high to the low, you can see it dropped at 50% only. But if you look inside here, you look for institutional order flow, other institutional order points. We have an order block here. We also have what? If you look inside, just to make yourself the chart more interesting for you, if you look inside, try to find reference points that market can react in. That's why this market had to come down here and react here. But this is 60% of the Fibonacci, meaning you are still buying high. You're going to be induced into the market. I hope this video is make it easy for you. Don't forget to subscribe on my channel. But if you can go around the chart and be finding inducements, you realize that you will know the reason why you're always chopping stop loss. Market shifted here. If you do from your Fibonacci from the high to the low, you can realize that, do you see it? And you start wondering why it reacted here. You look for points of why it reacted there. What institutional zones are you seeing there? That's the way you get your inducement. Let me find another one. Well, if I keep finding here, we will stay in this chart together forever. But you can play on your chart, use your Fibonacci from the high to the low. You will see it double top until there's a change of character, a confirmation on your trade. You will know how to enter your trade and how to get good pips. You will know the trades that are going to give you good profit. And so I hope this video was helpful to you. Don't forget to subscribe on my channel. I'm giving you value here, and I hope the value is making an impact in your trading. Thank you very much.